as well. Emami should be up for you on the screen. The stock is holding up in the green because the margin performance was very good this time around. So despite having sluggish revenues, the margin has improved to about 26.5% versus 22% last time. NH Bhansali, the CEO of the company, joins us now to take us through the performance this time. Mr. Bhansali, good morning. First, I'd like to specifically talk about your margins. What led to the improvement this quarter, and what could a sustainable margin performance be for Emami in the first half of FY15?
Yeah, very good morning. We are highly encouraged by these results for the quarter when despite tough times we have been able to deliver a good profit. And while all the FMCG other businesses are not able to show a good growth, we have been able to sustain a good profitability growth despite sluggishness in the economy and the overall offtake. The reason for such a good growth on the profitability is mainly we have worked very hard on cost reduction measures across all items of the P&L, right from raw material, packing material to investments in the brands also. So all these has paid well, and we have been able to show a good profit there. I think going forward in the next half in this fiscal, in fact in the current year, starting from the April itself, the growth had been very good. For the April and May, we feel we are highly encouraged by the kind of response we are receiving from the field, and we expect a good growth to come in the next fiscal. And
okay. Mr. Bhansali, are you trying to
margin, as you said?
Mr. Bhansali, actually your domestic sales has fallen by 4.4% in the quarter under review. Are you saying that the current quarter will be better, that this fall in domestic sales year on year will be arrested?
In fact, if you look at, that's not really a fall. We have taken corrections in the inventory. So on the primary level, there has been a slight fall in the for the quarter. But on an annualized basis, we have grown by 7.2%.
So what might you do now?
As I said, that
is this first quarter likely to look better than that 7%?
Much better, much better. We expect a good growth to come in. And in fact, if you look at the real numbers, the market share in all our categories have grown in all the categories. In fact, right from Boroplast to Navratna to Fair and Handsome, or even the Bans, we have grown in all the categories. So the market shares are intact. It was only because the weather was not good in the last quarter, and this has resulted into lower top line growth.
Okay.
But otherwise, the business is doing very good. We are highly satisfied.
Do you think you will be able to take any more price hikes in order to improve your gross margins?
We expect a normal price rise of around 4 to 5% on an annualized basis, on case-to-case basis.
Okay. What will your ad spends be, promotional expenses in FY15?
We expect a lot of new launches to come in the next fiscal, in the current fiscal. In fact, in the personal and healthcare sector. So this may lead to increase in the brand investments by around 200 basis points.
Okay.
But it all depends on how the new launches fare.
Okay. Could you
so it may be even be more than 200 basis, you're saying?
No, it would be higher than the previous year.
Okay.
Could you just give us a ballpark range of what the volume growth could be in FY15 for Emami? I mean, you've had, a couple of quarters of sluggish volume growth, but what could the ballpark range be this year?
Sorry, can you tell me, can you repeat your question there?
Sure. In FY15, in the next fiscal year, what could the range of volume growth be that Emami would look at?
We expect around 10% kind of a volume growth in FY15.
Well, one of the big advantages you all enjoyed this year was the fall in mentha prices by about 40%. What is the experience in FY15 so far? Will you continue to have the advantage of low raw material prices, low mentha prices?
The mentha prices still are at the same level as it was in the last year, and we expect good crop to come in this fiscal also. So we do not expect a sharp increase from this level.
Okay. You said 10% volume growth is what you're expecting for FY15. What are the key segments or products that would contribute to that volume growth?
See, it would be all round. In fact, we expect. See, if you look at the last year, summer and winter both were not good. The where the seasons were very erratic, and this they played a very bad role there. So we expect in the current fiscal the seasons would be better. Although there is an expectation of El Nino, but that may not impact us so much.
Okay.
Because the summer has already started picking up, and winter we expect it to be normal.
Talk to us about summer, Mr. Bhansali in Bombay. Well, what about your international performance? What is the share of your sales that has come from international sales in the fourth quarter, and what is the growth you are expecting in FY15?
See, last year we have grown by around 23% in the international business itself.
Okay.
And the growth has increased, its contribution to the overall sales has also increased from 10.5% in the previous year to 12% in the current year. And we expect this contribution of international business to grow further. We have taken lot many steps there. We are investing in brands in all the countries, so that should yield results in the time to come.
So what do you get to 14%, 15% in FY15 itself, or not that much?
Yeah, we expect so. We expect a gradual improvement as an overall contribution, because the domestic business is also expected to grow aggressively.
Okay. Just one final question then, Mr. Bhansali. Do you think this margin performance of 26% is sustainable in FY15? Or given that you have higher, new product launches and some higher ad spends for that, you may not be able to manage this 26%?
See, we have a good margin, in fact, but as you rightly said, that we would be investing into the brands in the new launches in this fiscal. So this may impact our margin by around 200-300 basis points. But then there will be an aggressive top line growth as well. So on and all, we expect a good growth in top line and bottom line both in the financial year 14-15.
Fair enough. Mr. Bhansali, appreciate you taking time out for us. Thank you very much for joining us. So that's a double-digit volume growth and maintenance of margins.